It took just 1 month for the Omicron variant to change the outlook in Europe. Berenberg's chief economist says the fast-spreading variant could overwhelm health systems, forcing other countries to follow the Netherlands into lockdown. A Societe Generale strategist says it feels more like Halloween than Christmas, given the number of economic risks out there. He lists the collapse of Turkey's lira, falling oil prices, and lower bond yields. Another sign that things won't be normal for some time. The World Economic Forum postponed Davos until early summer because of Omicron's impact on travel. Victoria Fernandez is the chief market strategist at Crossmark Global Investments, and she joins us from Houston, Texas. Grateful for your time today.
My pleasure.
All right, so we're looking at kind of the big picture here. Investors around the world, they really just seem to be rethinking everything with this uncertainty of Omicron. Plus, you've got the Fed's expected moves to tighten. Do you think we're facing a new economic cycle here, or is there still room to grow?
Well, Allison, I think the key is what you mentioned just a moment ago, and that was uncertainty. When we look back a few months, I think the big question that everyone was facing is, what is the Federal Reserve going to do in regards to tapering and rate hikes? And everything else people thought was somewhat contained. We thought, COVID, we got through Delta. We thought things were going to be okay there. It looked like the legislation with the infrastructure bill was going to be okay. And people really saw us more as kind of in the middle of the cycle. I think over the last couple months, we've really progressed more towards getting to late cycle, maybe not necessarily there completely, but we're starting to see some of those sectors that tend not to do as well in late cycle starting to come back a little bit. Now, is it just because of that? Probably not. You've spoken about the Omicron variant and the questions we've seen there, the Build Back Better issues, and we're seeing there. You combine that with the Federal Reserve and that people are saying perhaps March is going to be a live meeting to raise rates. I'm not sure I agree with that, but it's still conjecture in the market. And I think you have a lot more uncertainty than what people were planning on. And that's the volatility that we're seeing in the market over the last week.
To your point about the Federal Reserve, do you think the Fed is watching the stock market? I'm talking about these sell-offs that we've seen. So watching the market in relation to its expected acceleration in tapering and rising interest rates. Is there a point that the stock market decline could become an issue for the Fed and possibly even redirecting the other way, maybe a 10% decline, a 20% decline to incentivize the Fed to pull back on accelerating the slowing?
Well, they always say that it doesn't dictate what they do, but I think they have to pay attention to it to some degree. And obviously, their mandate, when you're looking at the labor market, when you're looking at price stability, those things are going to affect what's going on in the market. So maybe it's a secondary component of what they're looking at. But obviously, if we have a huge pullback because of concerns of the Omicron variant, because of concerns that the Omicron variant is now going to hinder some of the progress we had seen in supply chain issues, which means inflation maybe won't come back down as the Fed was anticipating, and I think many in the market were anticipating, then yes, it does start to feed into what volatility in the market is being, correlated exactly with inflation, with growth, with the labor market, and all of that is what the Fed is concentrating on.
To the bond market very quickly, even with the Fed's expected moves, not seeing yields moving any higher. What's going on there?
I wish I had a really good answer for you, Allison, and I don't. And it's quite frustrating, actually. We sit around, the CIO of our firm, Bob Dahl, and I were talking about this over the weekend, trying to determine what really the message is from the bond market with yields staying low. And I think actually more importantly, credit staying very well behaved right now, which tells you it's not a risk off sentiment in the bond market. And without the longer end of the curve moving higher, you have to wonder how much inflation is really a concern for the bond market at this point in time. So I feel like we have very different stories right now in the equity market and the bond market, and only time will tell which one is correct, or do they start to move together towards the middle? That would probably be my guess as we head into the new year.
Okay, Victoria Fernandez, strategist at Crossmark Global Investments. Thanks for your analysis today.
Thanks, Allison.